Welcome to WealthWave, and before you scroll away, let me ask you something. What if I told you that silver, yes, that shiny metal sitting in your grandma's drawer, just hit its highest price in over 40 years? Some of the smartest investors on Wall Street are now calling it the investment opportunity of the decade, and most people have no idea this is even happening. If you're new to WealthWave, we break down complex financial topics into simple, actionable insights that can actually help you build wealth. So go ahead and hit that like button now, and if you haven't already, smash that subscribe button because we're about to dive deep into something that could change the way you think about investing. This is your chance to understand silver like never before. Just a few weeks ago, silver prices surged past levels we haven't seen since the early 1980s. Prices climbed above $34 per ounce, and some analysts are saying this could just be the beginning. Silver isn't just about jewelry or coins anymore. This metal has become absolutely critical to the modern world. Think about your smartphone, your laptop, and the solar panels you might see on rooftops in your neighborhood. All of these technologies need silver, and they really need it. Silver is essential for manufacturing circuit boards, batteries, and especially solar panels, making it a metal of the future. The world is going green, and governments everywhere are pushing for renewable energy. Electric cars are becoming mainstream, and all of this requires massive amounts of silver. The Solar Energy Industries Association estimates that solar panel installations alone could consume up to 85 million ounces of silver annually by 2027. While demand is skyrocketing, supply isn't keeping up. Major silver mines are struggling to find new deposits, and mining companies have underinvested in exploration for years. According to the Silver Institute, we're facing a supply deficit that could last for years, which could push prices up significantly. Silver has always been gold's little brother, getting less attention despite strong historical performance. The gold to silver ratio has been historically high, recently sitting closer to 80 or even 90 to 1. This means silver is undervalued compared to gold, creating opportunities for smart investors. Experts like Rick Rule and David Morgan have been vocal about silver's potential. They point out that we're in the early stages of a commodity supercycle, and silver is positioned to benefit massively. Some even predict silver could reach $50 per ounce or higher in the coming years. Central banks around the world have been buying precious metals at rates we haven't seen in decades. Though mostly focused on gold, this spillover benefits silver too. Institutional money flowing into precious metals signals concern about inflation and currency devaluation. Inflation is eating away at the purchasing power of your money, from groceries to rent. Precious metals like silver have historically been a hedge against inflation. During the high inflation period of the 1970s, silver prices rose from around $2 to over $50 per ounce in just a few years. WealthWave focuses on practical investment strategies, not just theory. One way to get exposure is by buying physical silver, such as coins, bars, or rounds. You own the metal directly, but storage and security are challenges to consider. Another option is silver ETFs, which hold physical silver and allow investment without storage issues. You can buy and sell shares like stocks, making them liquid and convenient. The trade-off is that you don't physically own the silver itself. Silver mining stocks offer another route, amplifying price movements in silver. When silver rises, mining stocks can increase even more due to expanding profit margins. Companies like First Majestic Silver, Pan American Silver, and Wheaton Precious Metals are some of the bigger names in this space. Advanced investors might consider silver futures and options, which are derivative contracts to speculate on future prices. These use leverage, allowing control of large amounts of silver with little capital. This is high risk and not recommended for beginners. Every investment carries risk, and silver is no exception. Its price can swing wildly in short periods, with past spikes and crashes illustrating volatility. It's best to think of silver as part of a diversified portfolio, not as your entire strategy. Silver serves dual purposes, both industrial and monetary, making its price influenced by multiple factors. Industrial demand pushes prices up when the economy is strong, while downturns can reduce demand. Gold, in contrast, is primarily monetary, giving it more straightforward price drivers. During the pandemic in 2020, silver initially crashed below $12 per ounce. Stimulus and low interest rates drove investors back to precious metals. By August 2020, silver had more than doubled to over $28 per ounce, showing its dual nature. Current expert consensus is cautiously optimistic, with some projections for silver reaching $38 to $50 per ounce. Major financial institutions are putting their reputations on the line with these forecasts. Speculative positioning and potential economic slowdowns remain risks to watch. At WealthWave, we look at both sides of every investment story. The bull case includes supply constraints, surging industrial demand, inflation concerns, and historical undervaluation. But risks include price volatility and silver's dual demand nature. If adding silver to your portfolio, start small, keeping exposure around 5 to 10% of your overall portfolio. This allows benefit from price rises without being devastated by downturns. Time horizon matters, whether short-term trading or long-term investing. Premiums matter when buying physical silver, as costs above spot price can spike during high demand. Compare dealers to know what you're really paying. Awareness of costs ensures smarter investment decisions. Geopolitical factors affect silver mining, with production concentrated in Mexico, China, Peru, and Russia. Political instability or trade disputes can immediately impact supply. Even minor disruptions can lead to quick price spikes. Recycling dynamics also influence silver's availability. Industrial use consumes silver, and recovery is often uneconomical. This structural deficit contributes to long-term bullish prospects. Many wonder if it's too late to invest in silver. Even after recent rallies, prices are below inflation-adjusted all-time highs from 1980. This suggests there is still upside potential if fundamentals play out. Investing in silver requires discipline and patience. Price can remain stagnant for months before sudden jumps. A clear plan and understanding of your goals are critical to success. Silver's smaller market size makes it more volatile, but also responsive to big money flows. Retail buying in 2021 showed how quickly prices can move. Volatility is exciting, but requires caution. Action steps. Comment your views on silver, share the video, and stay engaged. Informed discussions help shape future content and investment understanding. Sharing spreads knowledge about opportunities in the financial world. Do your own research and don't rely solely on advice from others. Review fundamentals, reports from the Silver Institute, and bank forecasts. Data-driven decisions outperform emotion-based choices. Start small and build positions over time using strategies like dollar cost averaging. This approach mitigates timing risks and ensures diversified price entry points. It takes emotion out of volatile market decisions. Silver should fit into a broader financial plan. Ensure emergency funds, responsible debt management, and diversified assets. Silver can complement a portfolio but shouldn't dominate it. Industrial demand, supply constraints, inflation concerns, and prices below historical highs make the current silver story compelling. Massive gains or modest appreciation remain uncertain. Smart investors are closely watching this unique moment. Everything you need to know about silver hitting all-time highs is covered here. Subscribe to Wealth Wave for more insights on investment opportunities and market trends. Keep learning, growing, and building your wealth wave.